Back with another one, baby. We're gonna show you what you need to purchase a vehicle with bad credit, challenge credit. They put in so many different terms to not make you feel bad about you not paying your bills. I'm gonna go with some steps and some pointers so that you understand how this game works and how you're able to walk into a dealership and drive out with a vehicle. Number one, money down. Come in there with some money down. In bank terms, in dealership terms, they look at it like this. If you have bad credit, challenge credit, you haven't been paying the people that you had loans for. So you should have some money saved up to put money down. You definitely need money down. The next step, POR, POI, proof of residence, proof of income, check stubs. You need those check stubs. You need a utility bill so that it helps expedite the process so you're not running back and forth. We call those STIPs. Someone say, hey, I need all your STIPs. I need utility bills. I need check stubs. I need bank statements because some people get paid on the side. As long as you're depositing your money into the bank, it shows that you're making and earning money. That's gonna go under the income. That's very important. Depending on what type of vehicle you're trying to purchase. Say you have bad credit, you're always looking for the cheaper cars, $13,000, $14,000, $15,000. Some of you even have the nerve to want a $30,000 car and you ain't paid nobody. And I'm gonna tell you how to get it. The next thing you need to look for are subprime dealers. Those are dealers that deal with credit challenge, let's just say bad credit. And they have a finance department that specializes in getting those loans, getting you the rate, which is 18% automatic off the rips approved. And they can do that. You need POR, POI, money down, subprime lender. You catching up? Next key is a knowledgeable salesperson. Don't get Joe Blow that just ran in there a few days ago and he's applying for a job, he gets hired, and he has no idea of your credit situation, or if you explain to him your credit situation, he doesn't know how to navigate through it. So that's very important too. Look at his history, look at his track record, look at his desk, look at how he dresses, look at the happy stories that everyone puts about him online. Social proof. Social proof is I look someone up online, I'm going to Twitter, Instagram, any of the social media outlets, and I have people that are giving me social proof about this guy doing his job very well. So that's very, very key. LTV, loan to the value. So when you go on loan to the value, look at this. You'll see a car online. Let's say a Charger. Everyone wants a Charger or a Challenger, they want a muscle car. You're looking at 2016, 70,000 miles on it, and they're selling it for $15,995. LTV is loan to the value. So when you see the loan to the value, when the car salesman tells you that car won't work, don't think it won't work. Just know you need more money down for it to work because they purchased the vehicle at maybe $8,000, they're selling it for $15,000. The bank looks at what they own the car for from what they're selling it for. So that goes into LTV, loan to value of what the car is actually worth. So that car won't work. This car won't work. You're picking out 100 cars, they won't work. It's called a book out. Book out means they go look at the book of the car and they figure out we need to keep him around 100%, 110% of the value of what the car is worth. So when they're looking at the book out, you're at 130, 150% of the vehicle is not gonna get approved. Domestic and non-domestic. When you're trying to start your car process out to get in the car and get rolling with bad credit, don't be picky. When the salesman say, I got a car for you, and I've did this 100 times, been in the business for over 15 years, that vehicle you want from the vehicle you can afford that books out is what they look at. The vehicle is not booking out. So if it doesn't book out, you either got to come up with more money down or go to a different vehicle. So non-domestic vehicles hold their values, Toyotas, Hondas. So when they hold their value, it books out a little bit better. So when he says, I got this Camry, I got this Accord, I got this Civic, it'll work with your 20% down payment. With bad credit, whatever car you're looking at, the price you see online, put 20% on that so that you know your down payment that you need. You need 20% to go in there because they're looking at you like this. You haven't paid anyone? We need some collateral. You don't have a house to put up. So we need some money down. Also, filling out your credit application. Another quick thing, when you're filling out your credit application, least debt going out is better. If you're staying with your girlfriend, your wife, whoever is in the household, when that application comes up, rent and payment, I'm paying 0. Because most likely you have bad credit, challenged credit, the money that you're making, $2,500 to $4,000 a month is what they're gonna have. They're gonna use all of the money you make for the month, and they're gonna take that and subtract what you're paying out. So you don't want anything going out. You wanna be, I'm living with relatives, trying to get on my feet, and I'm going from there. That's why it's important if you work on the side, deposit that money into the bank. So if you're getting paid every 4 days, 5 days, every week, deposit cash into the bank. So when they ask for bank statements, which goes back to STIPs, which goes back to POR and POI, they want to see that you actually have money coming in, because they're going to look at it like this. If he's short for money and he has his rent due and his car note due, which one would you pay? Pay the rent and then worry about the car later. So they look at all those aspects. They're going to hit you with warranties. They're going to hit you with your drive out price, most likely for that vehicle you're looking at. If you're subprime, remember, subprime is special finance. They're gonna get you a 36, 48 month. It's gonna be a short term because you're buying a vehicle that's cheap and most likely it has high miles. So if it has high miles on it, they want you to pay it off in 3 years or 4 years. So with your $2,500 down on a $15,000 car, $16,000 car, with your 2K, you're minus the $2,000 on it. So after you're minus the $2,000, after tax, license, insurance, doc fees, and maybe fees that they have tacked on to get you approved. When I mean fees, this will go into another video, but a bank will say, in order for us to do business with you, for this client, we're gonna charge you an extra $2,500. They want that from the dealership. They want $2,500 extra from the dealership to do business, plus your down payment. It's illegal for the dealership to shift you those fees. So they need to find a vehicle that works and a fee that's low, so they're willing to absorb the fee and still take your $2,500 down, still give you 36, 48 months on your financing. On a $15,000 car, you're probably looking at $26,000 to pay it off with the 18%. So it's important when you go into warranties. When you go into warranties, what you want to look at before he sells you anything is gap insurance. Down here in Texas, floods a lot. So you better have gap insurance. So if you're buried in that car, buried means you owe way more money than what the car is actually worth. If something was to happen, they would pay the car off. That's what's important to get gap insurance. So going to how to purchase a car with bad credit and get approved. Must have money down, 20%. Proof of residence, proof of insurance, gotta have that. Income, make sure the income matches up with going out and coming in. A knowledgeable salesperson, so that he's not having you submitted to every single bank and you're getting all these denials. Because once you're submitted to a bank and they deny you, and when they do a submit, they punch it in the computer and the submit comes off and they shoot it to 20 banks. Everyone says no. But you got a good finance person, because you're dealing with a subprime dealership and a subprime lender. He'll go to Westlake, he'll go to Santander, and they will say, you know what? These are the steps, this is what he makes, this is what we can prove, let's get him approved. So you're submitting it to one and not many. Because once you submit to many, and I go to another dealership and they do the same thing, they're gonna look at why has everyone else said no? And they're gonna say no, because you're high risk. Next thing, warranty, always get gap. Floods in Texas. High rain, it's high rain, I drive my vehicle out there, and I owe $26,000 and it's worth, after I've driven it for a year and I go try to trade it in to upgrade, it's worth $8,000. You're way upside down, you're stuck in that car, we call that buried. So what you want to do is have gap, just in case natural disasters happen and you're able to get from under that car and you've been paying on it. So since you've been paying on it, what happens is you paid on that vehicle, so the next vehicle you get a lower interest rate. Now you're back in the game. Now you can go from 36 to 48 months. You can go from 60 months, 66 months, even 72, and keep your payment low to where you can afford it and you're not so upside down in the car. I'm gonna keep giving you tips. If you like the information that I gave you today, subscribe it, send it off to someone else. If you guys want information on vehicles that you can purchase where subprime dealers are at, I've been in this business over 15 years, 50 states. I know every single dealer that will give you a good chance of getting approved. You make sure you come and see me. I'll talk to you later. Yes, sir.